Hello and welcome to Core Finance, and I have Jeremy Lyon and Rob Double here in the studio with me today. So welcome to the programme again. I know last week we discussed market tops and bottoms with Jeremy, but let's kick straight off. Thinking ahead for this week, Rob, what are the things we should be looking at on the political front?
Predominantly the main thing which is dominating the news in terms of politics is Brexit, more to do with a power struggle at the moment, it seems, between Boris Johnson, the Foreign Secretary, and Theresa May, the Prime Minister. Off the back of a Daily Telegraph article by Boris Johnson, about a 4,000-word epic piece.
That's quite a long article.
Which, similarly, the same size as Theresa May's Brexit speech, roughly in length, so read into that what you may. But this is basically to do with hard, soft Brexit. The government is widely predicted to be pursuing a softer Brexit, Philip Hammond, business-friendly Brexit. For people like Boris Johnson, Priti Patel, the Brexiters in the cabinet, that is unpalatable. And so at the moment, it seems as if this week is where that clash is going to come to a head in the Conservative Party. And will Theresa May pull it off and be able to unite the Conservative Party behind her vision for Brexit in her speech on Friday? That's the main thing I think you need to look out for.
So watch the space.
Watch the space.
Well, Jeremy, setting aside the political things, we made a new high on the S&P only yesterday. What are your thoughts on things this week? I know you wanted to talk about the pension crisis particularly.
Well, we saw a small hint again from Mr. Carney, our governor, that interest rates might go up quicker than they are. And then 24 hours later he says, oh, no, it's a horrible thought of putting interest rates up. And the main problem is that if they do put interest rates up, the people that will suffer are not the general population, but it's actually the government itself, because they are the biggest borrowers of all time. And it's going to cost the government an awful lot of money by putting the rates up for overseas lenders. Yep. Now, the other interesting thing, the result of this, if I look over the medium to long term, the effects on our pension funds is absolutely criminal. Particularly, I saw some research last week that it's our more traditional companies, your Tesco's, your Sainsbury's, your National Grid, who have got serious pension fund deficits. And in particular, I saw some research, and it said that the Tesco price, which is approximately 180, that the deficit on their pension fund was to the extent of 60p a share, and the result of which it is unlikely they're going to might pay a minimal dividend, but they really should be putting much more money towards their pension fund to look after their staff. And also, more into this week, literally today, the reports from the university's pension fund, USS, they don't know what their deficit is. It is so large. And of course,
frightened to calculate.
So much proportion of that is government employees and university employees and teachers and all that sort of stuff. So it really is very frightening, and until they start putting interest rates up, these pension funds will never reduce their deficit.
So that might be the sort of slight silver lining, that as we see bond yields go back to a more normal
reasonable level.
Yeah, I mean, for how long now have they been below the rate of inflation?
Well, and it's getting worse.
Yeah.
And in fact, Mr. Carney only said in the States, he had to go to the States to say it, that he's very worried that the inflation rate actually is going to get even bigger. So rates have got to go up, and urgently.
And I can imagine that, for a lot of people whose mortgages depend on it, this is a rather unpalatable
Well, they
message.
know it's going to happen, and that's why the property market's calmed down quite a bit.
Indeed.
So, it's realism rather than dreamland.
And is there anything else that we should be looking out for this week that you...
Well, I mean, the politics is actually vital.
Yeah.
And how Mrs. May is going to get around this problem. We've had a very good article in the Financial Times today from Lord Lawson saying, we're going to get in a hard Brexit. It's just realism. And let's get on with it. And that's exactly what Mr. Boris has been saying.
And in many ways, what the markets really want is the reduction of that uncertainty. When Theresa May first said Brexit means Brexit,
yeah.
it actually helped, because it kind of gives you a worst
well,
case
if
scenario.
you know, but I mean, a great proportion of our exporters, they just want to get on with it. If you sort of, it's going to cost them another 5 or 10%, they'll live with it. They'll just have to stand up and get on with it.
Indeed, in this morning's City AM, the CEO of Brompton Bicycles was making exactly that kind of comment.
Yeah.
So it's certainly going to be an interesting week politically, and that worry about pensions, which is not going to go away anytime soon, is probably the biggest issue. Well, thank you guys very much indeed for being with us this morning, and we'll have you back on the programme again soon.
Okay.
Thank you.